Good morning, everybody. We have a mixed trade in the grain markets here early on Thursday morning. It is 6:30 a.m. Central Time. March corn futures up 3 3/4 at 478 and a quarter. March soybeans up 14 cents at 13.14. March Chicago wheat down 4 at 636 and 3/4. March Kansas City wheat is down 3.5 cents at 597 and 3/4. March spring wheat is down 3.5 cents at 592 and 3/4. So the corn market, the soybean market, the SRW wheat market, and the HRW wheat market all posted fresh multi-year highs during the overnight session. Argentina has suspended corn exports in order to ensure domestic food supplies. This is fuel to the bullfire in the corn market, certainly. This was announced yesterday. We knew about this late in the trading session yesterday. May have been responsible for some of the late session strength. Sales of corn on the export market out of Argentina will be suspended until the end of February. That's what the country's ag ministry said yesterday. The government, it's being reported at least, the government is struggling to control food inflation. This is an effort to help people with low income who are struggling because of COVID, the pandemic. Argentina is slated to be the world's third largest corn exporter, according to USDA's most recent report. They're projected to account for 18% of all global exports. This news was a surprise to many, including farmers in Argentina. The head of one trade group said, "We are absolutely surprised. It does not make sense. There was never a lack of corn in Argentina." But in any case, this is certainly a deal that could drive some additional export business to the U.S., maybe only if temporarily. We're only talking a couple of months here, but that could be something and is certainly not bearish by any means. More Argentina news here. Soybean crushers back at work. Work resumed yesterday after that 20-day-long strike was ended earlier in the week. One of the union reps said activities are normalizing as of the start of the first shift today, and that work schedules at every plant are back to normal. So the strike is over, and they're back to normal in terms of that portion of what's going on in Argentina. The U.S. dollar is on track for its worst monthly close potentially since January 2018, and we need a lower close today, I think, in order to accomplish that. But in any case, the dollar traded fresh lows again overnight at one point. Investors are pushing money back into risk assets, stocks, commodities, things like that. They're moving away from the dollar. In addition, you've got a massive U.S. deficit, huge government stimulus, money printing, whatever you want to call it. It's resulted in reduced buying power, I think, and that weak dollar is a positive for any commodity priced in U.S. dollars, of course, corn, soybeans, wheat, you name it. U.S. ethanol production fell last week. Weekly output 934,000 barrels per day. That was down 4.3% on the week. It was down 12.4% versus the same week last year. So the ethanol production number is actually worse than expected, I believe, and still very much struggling. Ethanol stocks were up 1.5% on the week at their highest level since mid-May, 23.5 million barrels. So stocks continue to grow in ethanol, while production may very well continue to fall amid weak demand. Gasoline demand was up like 1% on the week, but it's still 9% below where it was the same week last year. So ethanol margins, spot margins, production margins, and forward production margins are very poor. We could very well see lower ethanol production during the coming weeks and months. The first quarter does not look good for the U.S. ethanol producer. Fund money continues to pour into the grain markets. Funds were estimated to be net buyers of another 15,000 contracts of corn, 10,000 contracts of soybeans, and 20,000 contracts of SRW wheat yesterday. It's estimated now that funds were net long 347,000 contracts of corn at yesterday's close. That's the largest net long for the fund since 2010, 2011. Fund length could again be approaching record levels in the soybean market. It's again becoming heavier in the wheat market. So again, a lot of this has to do with fundamentals. We've got some of the better fundamentals in corn and soybeans that we've seen in years, especially in the case of soybeans. In the wheat, I don't know if I can really make that argument. USDA is projecting a record high stocks to use ratio for global wheat and a record high ending stocks number for global wheat. And in any case, I think that this weak dollar is driving money into commodity markets. I really do. I think it's an inflation hedge for these big funds to be long commodities. You've seen it more in some commodities than in others. Like we've seen a lot of it in the grains, not so much in the livestock. You've seen maybe a little bit of it in the energies. But if this story continues, you may see that money pour into some of these commodities that have not yet been impacted. USDA will release its weekly export sales report later this morning, 7:30 a.m. Central Time. Both corn and soybean sales posted marketing year lows last week, so some relatively soft numbers are expected again today for row crops. Corn sales expected 500 to a million, soybean sales 200 to 700, wheat sales 200 to 600 is what's expected. Remember, the grain markets are closed tomorrow for the New Year's holiday, so following a normal 1:20 p.m. Central Time close today, the markets will reopen Sunday night at 7 o'clock. Cattle market was kind of a mixed bag yesterday, mostly lower closes. There was some cash trade, I think 110 to 112. We'll see what develops here today. Ahead of the cash open, the Dow Jones is down 20 points. The S&P is down 1. The bonds are flat. US dollar is about flat, had been lower overnight. Crude oil is down 46 cents, 47.94 in the February WTI. Precious metals mixed. If you'd like some more information from me, as always, you can go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan here in the upper right-hand corner. If you would like to know when, how, and specifically I am pricing corn, soybeans, and wheat throughout the year, it's broken down by crop year, by percentage. You can sign up for my deal. It's $49 a month. I'll send you my email every business day at 6:30 a.m. Central Time. It goes along with a text message service, and you can cancel that deal at any time. There's no other fee, no other obligation, no trading account needed. You can be a cash-only marketer and follow these recommendations. So certainly take a look at that if you're looking for some improvement in 2021. Everyone have a happy new year. Have a nice 3-day weekend. I'll be back on Monday.